Hello investors, welcome back to the Trend Trader channel. In today's video, we've invited another fellow YouTuber. This gentleman is also a financial market content creator. So we invited him into our YouTube channel so that he can share with us his investing journey. There are a couple of questions that we ask him. Finally, to those people that haven't subscribed to our YouTube channel, please consider subscribing, especially if you find value on the content that we are sharing on our YouTube channel. And if you find value in this very specific video, please make sure that you smash that like button. On top of that, we would like to ask you that you also subscribe to the gentleman's YouTube channel. Welcome, Phumudzo. The name is Phumudzo Siphoro. He's another YouTuber. Today we'll be asking him a couple of questions. So before we begin, welcome. Say, how are you feeling today?
Well, I'm fine. I'm fine. Thanks for having me in your channel. It's good to finally be in one of the, I don't know if I can call it interviews, but I'm really excited. And obviously, yeah, I don't know how the interview will go, but I'm just hoping for the best. But yeah, thanks for having me here.
Basically, for those people that don't know, Phumudzo also has a YouTube channel. I will leave the link to his YouTube channel. Check it out and also subscribe. Make sure that you watch his videos. But let us allow Phumudzo Siphoro to tell us the question that I would like to know. Who's Phumudzo Siphoro? Your day-to-day life when you are not being a YouTuber.
Oh, well, Phumudzo Siphoro is a civil engineering technologist. I studied civil engineering in the University of Johannesburg. Then I furthered my studies in the career, I think, in UNISA, which, now I'm practicing, or I'm a civil engineering technologist working at a private firm. So my 9 to 5, I'm practicing civil engineering, building, roads, buildings, water, sewer, but I work in a consulting firm where basically we just do the design work and construction monitoring here right there. But otherwise, I'm a civil engineering technologist.
Okay. Yeah, I know it's good to see that there's a combination of tertiary education and training and also the interest in the stock market. So the next question that I would like to ask you, I believe you are an investor. How long have you been investing?
Well, I started my investing journey, I think, just before the pandemic started. I think 2019, if I'm not mistaken. Towards the end of 2019, I started my investing journey then. And it is one of the things that, yeah, basically in life, I've tried a couple of things. I remember I once had a chat with you. I think, I'm not sure if it was on inbox or if it was on a post I posted saying that I've tried a couple of things. I don't know if you can remember that. So with investing, I've never really felt connected to something like the way I connect with investing. So the moment I started investing, I felt so in love with investing in a way that, I so much wish I should have studied it earlier. But it's something that is now really, really close to my heart. I've got other things that I do outside of my work, maybe other small businesses, but with investing, I'm really, really into it. So, or it's something that out of the other, maybe other side hustles I do, it is something that is closer to my heart. So it's something that obviously from 2019, ever since I started, I never looked back, and I'm so deeply in love with the with investing, or
Yeah.
to be as an investor.
Okay.
Mm.
Yeah, no, the
Yeah.
financial markets, they can be addictive. That is why most of us, we spend a lot of time looking at the charts or going through over some information regarding the financial market. So that's great that you started in around 2019 before the COVID, and COVID happened. A lot of things happened. And you mentioned that you've got other things that you do on the side other than your work and the businesses. So when it comes to the financial market or the stock market, what is your approach? How do you approach the financial market investments?
Well, my approach in when it comes to the stock market as a whole, or investing in the stock market, is obviously I'm one person who's into it, looking for capital gain. I know that obviously there are people who invest for dividends. I also like dividends. I'm not saying that I don't like dividends, but my main goal, or one of the things why that I strive or I aim for, is to get as much capital gains as possible. Can give me as much capital gains as possible, if I can put it like that. So instead of me maybe going for companies based on how much it can pay me for dividend, uh, I, 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 I opt to choose companies that obviously, yeah, I personally believe that they can give me or they can multiply my money 2 times, 3 times, or even 10 times. So I prefer, or my approach in the stock market is to focus, or is to buy companies that can give me as much money as possible. That is how I approach um, the financial market or the stock market. And I think those of you that, or some of the people that follow me on my YouTube channel, most of the time they will realize that I'm stocks. So my approach is I'm more into growth than into value stocks. Yes.
Okay, yeah. You see, now you've used some keywords there, growth stocks versus value stocks. I know sometimes when people choose to invest, people will talk a lot about receiving dividend income from their investments, but also the other side of the coin is growth, capital appreciation. And it's also possible to have companies that can grow in terms of share price, giving you capital appreciation, but also to give you those nice dividends. Unfortunately, for some newer, fast growing companies, usually people, they buy them because they believe in the future, and those companies are not necessarily paying dividends because they've just started and they're expanding. So the bigger value, if I can use the word value, is through what the company can do in future. But okay, that I understand. So now, when it comes to risk management, as people, when we talk about risk, we talk about different things. But when I'm talking about risk, I'm talking about the possibility of a loss. If you invest in a company, there's no guarantee that the share price is going to go up, or if that company is going to continue to pay you dividend, if it's a company that pays a dividend. So the way I define risk is a potential of a loss, meaning the principal. If you invest in a certain company, the share price go down, and then maybe an unfortunate event happens, the company delists, then you lose your capital. So that's the kind of risk that I'm talking about. But also, Warren Buffett talk about investing with a margin of safety, meaning that you find a company where you are buying, you are not paying too much. So the gap between the current price and the perceived value of that business is the margin of safety. When Mr. Siphoro, how do you approach risk management, or your definition of risk management in your investments?
To me, I'm sure if you have watched a couple of my videos, um, I do a lot of fundamental, or when I invest, or my approach to the stock market is I approach it using fundamental analysis, or I use fundamental analysis to determine the companies that I want to buy. So for me, as long as a company, when I do my fundamental analysis, check the company's future prospects, the current development, to me, as long as the fundamental side of the business is fine, the company is growing, I see growth in the company when it, maybe let's say when they are reporting the company's earnings or financial statements, I see growth in that when I compare to the previous financial maybe quarters or previous financial years. then that company, to me, depending on whether the share price goes down 10%, 20%, for me, that does not make me to panic, because I know the fundamental, or my approach to the stock market is that I look at the current developments. What is the company doing now? How is the company performing financially? If it is a company that is, say, for instance, because I invest in companies sometimes that are not profitable, how is that company performing when going to profitability? Are they going closer and closer to become a profitable company? So meaning that, if, say, for example, when I check at their EPS, or earnings per share, sorry, I'll use a couple of terms that I use to analyze them as we go along the video. So let's say an EPS, which is the key term that we know that it measures how profitable the company is. If it is not, or it's not a profitable company, I check how closer it is becoming a profitable company. Then if it is becoming closer and closer, obviously, then I know that that company is a good company. But obviously, I check also their future prospects. What are they doing? What are the plans that they have? What is there growth? Can I see growth in the company? Then if I see growth and I see them obviously performing well when it comes to the revenue generation, their revenue is increasing, then I know that uh, regardless of what might be happening in the stock price or share price of that company, then I know that that is the company that I'm going to continue if investing in, unless the fundamentals change, or unless something changes, then maybe I can change how I see that company. But as long as the company is still having good fundamentals, it's still growing, its future prospects are massive, yeah, then it's a good thing, or I'll continue staying in that company. Or so I also check things like, what are the insiders of the companies doing? If they are buying their own company, then that is also a very good sign. I mean, if you own a company and you know that your company is not going anywhere, you can never put more money, or you can't invest more in the company that in your company that you see that maybe it's going down the drain. But if you are putting your money in that company, then that tells me that you see the potential in your company. So that is also something that I take as a good sign that my money is in a company that not only based on the fundamentals or the future prospects, but also based on what the insiders are doing. It has a potential to do really great in the future. So that's how I analyze sort of like my risk. I don't know if I answered you, but
No, you did. It makes sense. So sometimes we hear people saying that I'm sticking with this company because the fundamentals haven't changed. But usually people don't define what kind of change they want or that they will wait for. So when you say you're waiting for the fundamentals to change, what kind of a fundamental change that can make you to sell your shares if you exit your position by selling your shares?
okay, well, to me, one thing that obviously is very important is, of course, companies' revenue. You want to invest into a companies whose revenues are increasing or growing over time. So the moment you start seeing that company not growing in terms of revenue, or the moment you start seeing them reporting lower revenues than the revenue they were reporting the previous years, previous quarters, that should be a red flag where you need to go and check what's happening, or what's causing the that company to have or to report bad earnings than they were maybe in the previous years. But it is important. I think it is important that you check why, because you will know that sometimes a company reporting poor earnings than they did the previous years, or a previous year or previous quarter, does not mean that it's not a good company, because it depends on the current economic conditions. Like we saw good companies in 2022 reporting poor earnings due to what? Due to inflation. the entire world at large, there is a problem with inflation. The cost of living is just too high. Interest rates are rising, and when interest rates rise, obviously you get companies not doing well. So it means that obviously, people get hesitant to use the services that maybe they were using for a certain company, which then leads into companies not performing well. So it is very important that obviously you check these things, because then you cannot say that based on maybe what happened, say for instance in 2022, where I'm saying that a lot of companies reported poor earnings simply because of inflation, and say that that is a poor company or bad company to invest in. But it just means that the economic conditions were not right, and it does not mean that they will remain like that. You just have maybe to have patience and see how this year unfolds. I mean, the good thing, if you are to check in inflation around the world, it is coming down. So, or it is, we are seeing a deflation sort of like, which is a good thing, meaning that at the end of the road, or in the near term, we might see central bank, the Federal Reserve, stopping increasing interest rates, which will be obviously very bullish to the companies that we invest in, and we are going to definitely see their earnings, or earnings of most or some of the companies we invest in becoming good. But though, like I said, there are companies that were not doing well last year, there are still companies that did very well, which obviously that is another good thing. That if your company that you were investing in last year, regardless of the bad economic conditions, was doing well in terms of earnings, their earnings were still growing regardless of the economic conditions, then most definitely that is a company that, I mean, if were doing good during inflation or during bad economic conditions, it definitely means that when the economies recover, they are going to continue striving.
Okay. No, yeah, that does make sense, because people will always say that the fundamentals will change. And also you highlighted that it shouldn't just be about what is happening on that particular company. You need to understand what is happening at a macro level, what else is happening to other companies or industries or sectors, so that whether it's that company struggling alone within a particular industry or sector, or it's the whole sector that is affected, or sometimes it's even the whole market that is affected locally or globally. Right. So you've been investing since 2019. I'm sure you've had up and downs in the stock market. Can you share with us your three best investment and your three worst investment since you started investing in the stock market?
When you say three best, do you mean you mean companies that really did well and I saw massive growth, and the companies that maybe, or you just mean as a whole, like maybe a summary of what is it that I learned, what were the pros and cons? I'm not sure. Maybe just repeat that question.
Okay. Since you started investing,
Yes.
I'm not asking which companies you like, for example.
Mm,
I'm asking for
mm,
companies where you saw a lot of return. Remember, you mentioned that you invest for capital
mm.
gains mostly. So, are
Yeah.
there any three specific companies that have shown you the largest returns, and also the companies that have shown you the worst returns? There's a video where we were talking about one JSE company, which you said you regret investing, but that does not necessarily mean that it's in the top three. It could be just one company that you regret,
Yeah.
not necessarily the worst. So I'm asking in terms of returns based on when you started investing in that particular company up to date. So where you saw massive returns or where you saw poor returns.
Okay. So basically, companies that really did very well to me. Well, maybe before I give you the companies, I should mention that sometimes when I'm investing, I mean, I'm investing in for capital appreciation. Sometimes I find myself with a situation whereby the company gives me too much returns in a very short space of time, where you find that I got 300%, 500%, sometimes even 600%. I mean, I've seen that in a couple of times, and that happened, I think, in a period of 2020, in the second half of 2020, where we saw a lot of companies, both locally and internationally, giving investor massive returns. I mean, locally, I remember there was a company, or there is a company called Tsogo Gaming. There was a company called Tsogo Gaming,
Yes.
which I remember in 2020, if you have to go look the share price of that company, I think beginning of the pandemic, the share price of Tsogo Gaming, I think it came back, is it 1 rand something something? And then obviously I put some good monies there, and that company for me, I think it grew by 400% within a space of 3 months. I remember that very well. Then obviously, yeah, that was the it for me, and I decided to obviously quickly sell that company. So that was the main highlight, or the good thing, or company number one that did really well. Then another one, I think it has to be, and this one is a US company. It has to be. There was a company called Asana. Though now I know the share price have plummeted, but it's just that me, I was quite lucky, and I think the very first time I started investing on that company, I even did a video and shared on my YouTube. I found it trading around $20, I think, if I'm not mistaken. Then I think it went to over $60 or almost $60. I can't remember. But there also, I think I made almost 300% within a very short space of time, which obviously led into me obviously selling that stock. Then I've got stocks like Sun International also, which really did well for me, because this is a stock which I remember when I started talking about it on my YouTube channel, I think it was trading at 9 rands. During the pandemic, that stock, I think it even went to 8 rands. But I think I sold that stock, I think for almost 100%. I can't remember the thing. But to me, initially when I started investing, obviously I didn't have enough cash. So you would find that sometimes when I see that there's a company that makes more sense for me, or I can make more money faster, then I take, of course, I would trim some of the holdings that I own in a certain company, then take to another company. So that is why also you find that during a period of 2020, there was a lot of selling, also buying and selling, depending on where I see future potential. So if Sun International, I see that obviously, okay, this is a company, that sector, the reason why I sold again, it was for Sun, especially for Sun International, we're still in the middle of the pandemic, and obviously Sun International is the traveling, it falls under the traveling and leisure industry. People were still restricted to come and travel, so I knew that that company was not going to do much then, so it made sense for me to sell that company at 100%, looking at the economic condition, especially of the pandemic, to see that people were still restricted to travel in and out of South Africa. It was quite tight. But the mistakes of one thing that really I learned, which obviously I think you were talking, or you touched a bit about the video, which I said I regret, the only stock I regret buying in the JSE. Now, what happened is that that stock, it was a penny stock. I remember uh, when you, or remember when you go to social media, especially to the new beginners who are investing into the stock market, one thing that obviously they are looking for to buy, they look at companies that their share price are very low. So you find that when they are investing and want to start investing, they look into companies that are which are low, which obviously myself, when I was starting back then, I came across this company called Nutritional Holding, which was trading at 1 cent per share, 1 cent per share. And obviously, it was a penny stock, which I thought back then it was going to obviously do well. I mean, even if you had to check at their financials, I don't think they were doing that bad, or they were a bad company. I mean, they were doing quite well in the, especially if you look at the financial side of the business. The only thing I think which led into me ending up to regret buying that company was when they got suspended from the JSE due to not confirming to some laws or rules that the JSE uh, put out there for companies that list under it. So that of course led into okay, the red flag of saying that, okay, this company is not, it might face delisting due to not maybe adhering to some of the rules and regulations that are set by the Johannesburg Stock Exchange, which obviously when that happened, I think most of the people that own that stock, we could not buy, we could not sell that company. So whatever you had invested in on that company during its time when it was trading, it was locked. And for me, I think I was lucky because obviously I had not put that much money. I think I had only put 2,500 to that company because obviously, yes, I know penny stocks sometimes can maybe easily double, triple your money, but they can be quite risky. So I always had that thing of saying that even when investing to penny stocks, even now, penny stocks are companies that I don't put too much money because I know they are quite risky. And I think it's one thing that I see quite a number of people, maybe especially the beginners, maybe falling into a trap of thinking that penny stocks will double their money. So penny stocks is the way to go. Yeah, I think I've done also a video on my YouTube channel indicating or showing how when I say they are quite risky, what do I mean?
Mm.
Which obviously, yeah, that led me losing my 2,500 because when that stock when the announcement was made to say that they are delisting from the Johannesburg Stock Exchange, yeah, the entire money was gone. The whole 2,500 was gone.
Mm.
So that on me, it was also a lesson learned, specifically about that company. Yeah, one last thing which maybe I can say that I've learned also, or something that on my side, though I said that I was buying to maybe pursue other investments, I've realized that along the way, sometimes I sold companies which then maybe did really well. You find that I sold a company at 200%, and maybe a few months you find that company had I not sold it, I would be at over 1,000%. So I've encountered such, which obviously that just definitely or that instills something in me to say that whatever I do, especially my approach now, is that whatever I put my money in, I try to invest for as long as possible. Back then, my approach was that if I see better opportunity, I will sell some stocks then go buy. But now the approach or my approach is sort of like changed to say that now if I don't have money to buy that company, I don't buy. I wait the time I have money, then I buy. I don't sell my shares or my other companies or trim, but I just wait until that time I have money, then I know I'm prioritizing that company or stock.
Okay. So you mentioned that you had some companies locally and abroad. For people that are familiar with the YouTube channel, two of the other companies that you cover a lot is Sophie and Neo. But the question that I want to ask you is not related to those two specific companies. Between the JSE and investing offshore, which one do you prefer and why?
I prefer offshore due to the fact that obviously I prefer investing in the US more than the JSE simply because of the economy. I mean, the US economy is way bigger than our economy. The US economy thinks in terms of technology, things in terms of development of sectors. Those sectors develop way more faster than our sector, meaning that me as a person who chase capital appreciation, there are more opportunities in the US than local. Like say for instance, I mean in the US, I think the last time I checked, there are over when we check their stock exchange, there are over 2,400, I think, companies listed in the New York Stock Exchange. Whereas here in the JSC, I don't remember the number, but I think it's 300 and something. I stand to be corrected, but I think it's roughly around 300 and something companies, which that in itself must just show you of how big and massive the US economy is. So obviously, and more opportunities at that side. I mean, there are sectors that are booming in the US that are not even in South Africa yet.
Yeah, so I think the
So
viewers are aware that you are an offshore guy. So yeah, Once again, thank you for spending this afternoon with us. So people that want to connect with you, obviously we'll link your YouTube channel so that people can find your YouTube channel and subscribe to it. I know on Facebook you are there, you are active. Are you active on Twitter, Instagram?
Yes, I am most definitely active. I'm definitely active there.
We will then put the link to your social media accounts so that people can connect with you and be able to follow your journey, and also as you share it on your YouTube channel. Once again, thanks Phumudzo for being with us today. I think what I have learned about your approach is that you prefer capital appreciation. Yes, everybody appreciates dividends, but you're a capital appreciation guy. Like everybody else, you've made some mistakes, especially with penny stocks, but we all learn from those mistakes. And also that, well, since we are in South Africa, we prefer to invest offshore, in this case offshore being a US, because some of the companies there, in terms of the stock market, they've got more companies in their exchanges and a lot of opportunities. We know in the GSE we just have slightly below 400, I think it's around 380 companies, and we see some companies continue to delist. So that means that they were getting less and less opportunities. Obviously, we can still make money on the remaining companies, but if you compare with the US, they already have over 2,000 companies in the New York Security Exchange alone. There's also a NASDAQ. So people can also consider investing offshore, whether it's US. For those that are using easy equities, you can invest in US, London, Australia. I think now there's also Europe, but London is still there in Europe, just not part of the European Union. And you can also then connect with Phumudzo on his social media accounts, including his YouTube channel. Please check it out, subscribe, follow him on Facebook, Twitter, Instagram. So that's it. Once again, thanks, Phumudzo. Thank you very much, my brother.